Hey, it's Tyrone Jackson, a wealthy investor, back with another hot investing wealthy investor video. Hey, listen, if you like the content that you get on this channel, make sure you ring that bell and subscribe here to the Wealthy Investor, as I'm always posting new videos and things are always changing in the stock market. Okay, today I want to dive right in and I want to talk to you about investing in stocks that you understand. In other words, I have a saying in a wealthy investor program, which is don't buy the stock if you don't understand the story. Some stocks behave wildly, meaning they go up in value, but you might not understand the story. And today's lesson is about a company called SalesForce.com. SalesForce.com. Now, they have software programs that really integrate all kind of services for small businesses, right? And they're adding new programs and services, kind of like a one-stop shop. If your business is making over $50 million, they have a service platform that will service you so you can see all of your company's logistics, sales, and marketing in one place. Now, that might not initially mean a lot to you, but you'll notice that Salesforce is now trading at 157.22. 52 weeks ago, the shares were trading at $120. Now, here's where the game gets interesting, and as you see here, they pay no dividend, which kind of violates a wealthy investor rule depending upon the size of your trading account. Remember, I'm always trying to help you make max dollar without being greedy in the stock market. However, if you look at a 5-year chart of Salesforce.com, their ticker symbol, by the way, is CRM. Notice that 5 years ago, the shares were trading at around $60. And because of the float size, the stock has had its share of volatility, right? So it's never one of those stocks that goes straight up. We see this pattern all the time. We see like these peaks and valleys. This is what volatility looks like. Notice there was a steep decline from 159 all the way down to 122. The stock sold off, tried to retrace, hit 122 again, and resumed its pattern. Now, the truth is, this is that October pullback that we saw last year that was market wide. So the stock kind of reacted in context to market. But had you held the stock for 5 years, would you have made money on it? Well, it went from $60 to about 157, and that chart looks something like this. Salesforce.com, ticker symbol CRM. If you had just held the stock for 5 years, we know the 52-week range was from 60 to 157. That means $1,000 invested in the company shares. You didn't touch them. You didn't follow wealthy investor buy signals, but you just did straight investing. $1,000 today is worth $2,616. Not bad. Not bad. You've gotten almost a 200% return on your money. Very nice. Okay? You've actually got more than 200% return on your money. But look at a $10,000 investment. See, this is why you invest in the stock market, because within 5 years, $10,000 has turned into what? $26,000. If you were an institutional investor, $100,000 is now worth what? $261,000, and the stock is moving. Well, why am I teaching you this lesson here today if these numbers are so fantastic? It's because you really have to understand exactly what this company's doing as it relates to its platform, right? So every time they add a product, you see here their product overview. Every time they add a product or service here, you really have to understand how that's affecting the company's top line revenue. And if you don't understand that, you are simply guessing, right? So even though the stock has gone from 120 to 167, and I know someone in the comment section is going to go, but you're criticizing this company. Yes, I'm criticizing it because most people don't understand how the company actually generates its top line revenue. And even though the 5-year chart looks like this, I would not suggest that you, as a novice investor, actually put your money into investing in Salesforce.com. Not because it's not a good company. It's a great company, but the story behind it, how they generate that top line revenue, very complicated for the average investor. So what would be the alternative? I would prefer that you put your money in Visa. Now, look at Visa, ticker symbol V. A, it's a member of the Dow Jones Industrial Average. B, it pays a dividend that is consistently increasing. And look at the 5-year performance here, from $48 a share, less volatility because we know the institutions want that dividend on a regular basis, more of a steady climber. Remember that pullback I showed you? Visa went from 150 down to 130, not as steep a decline. And look, retracement followed thereafter. Visa's story is simple. It is not a bank. It collects fees on worldwide transactions every single day. To me, that is a better story. If you really want to take your trading and investing to the next level, remember, you have to have that financial education. We're not guessing in the stock market. We're using a methodology of fundamentals and storytelling, understanding the stories of the companies that you are investing in. Now, as always, if you want to follow my trades and send me your weekly questions, you could do so as a member of WITradeschool.com. But here's what I want you to do, because the next 52 weeks are going to be very dynamic in the stock market. Stay with stories you understand. Don't go guessing and throwing a lot of money at stocks just because they rise. Hey, that's my advice of the day. And I'm wishing you much success in the stock market. But I am here to help you grow your money in a way that lowers your risks and increase your income.